This conference will now be recorded.
Let us try to understand basic functionality and basic the accounting process flow with FI integration from SD side. How your FI will get integrated with SD, let us try to understand along with the accounting impact. Let me write FI SD integration. Let's take one example here as well. Example number one, sold, let's say, material to customer for 10,000, or I'll say sold material 10 quantity to customer at the rate 1,000 each. Let's assume this is the scenario. We have sold material of 10 quantity to a customer at the rate 1,000 each. Okay, this is the scenario. I'm not writing any names, I'm not writing any material. So you can replace material with any product or any service. Similarly, you can replace the customer with any name. Before we try to understand what will be the accounting impact for this and what is the process flow for this from the SD point of view, how you are going to understand this is sales from SD integration point of view. First of all, first we need to understand who is your customer. Let's say we need to understand customer. Who is our customer? Point number two, what product are you selling? Point number three, sale price. Point number four, cost. Or instead of this, I'll put material sale price and then I'll put material cost and then I'll put profit. That's it. So from this example, we need to understand the following information in order to understand what exactly is happening from the sales cycle. First, we need to understand who is the customer we are selling the product to. You can replace any name according to your requirement or according to your choice. Since this is an example, I'll say ABC Private Limited is your customer. ABC Private Limited is your customer. Material, I'll say some chocolate boxes. Material sale price, we are talking about 1,000 each. Material cost, I would say 800 each. And when we talk about profit, profit will be 1,000 the sale price less cost price is 800. So it will be 200. Profit will be 200 each. Any doubt from this? Any question on this? Okay. Now, assuming that this is the requirement, and from this point, one thing or one information that we could not get, that is your cost. Whenever you are performing any sale, you will not be knowing what is the cost of the material, because when you are performing any sale, you will be listing or you will be mentioning only the sales price. Your profit is always sales minus cost of goods sold. In short, sales minus cost. Cost is something that you will not be including in your sales process. Cost is something that gets picked up automatically during your SD process. SD process. And if you look at any particular sale, are we able to figure out what profit are we getting from the sales accounting cycle or not? We will try to verify now. First thing, when it comes to FISD integration, your process flow is sales order. Based on the sales order, you will create delivery followed by PGI. Based on the delivery PGI, you are going to perform billing. Based on the billing, you are going to receive the payment, customer payment. Based on the customer payment, you are going to perform BRS. This is the process flow that is normally carried out during your SD integration with FI. Now, when it comes to sales order, first one, when it comes to sales order, for sales order, there will be no accounting entry, there will be no financial impact. For sales order, there will be no financial impact with the sales order. Next one, when you perform delivery slash PGI, delivery is not going to create any accounting document, but PGI will create the accounting document. PGI is nothing but post goods issue. When you are performing post goods issue, you are going to generate or system will pass one accounting entry, wherein a debit and credit entry will be posted. How this debit credit entry is getting posted and what values will get updated, from where the values will get updated, we will have to understand. Now, when you are talking about sales order, there is no financial impact. After sales order, you are going to perform a delivery. I'll put PGI, post goods issue. Delivery is a separate activity, post goods issue or PGI is a separate activity. When you perform PGI, which is nothing but post goods issue, system is going to pass one accounting entry. This accounting entry will be cost of goods sold will be debit and material will be credit. Cost of goods sold account will be debit, your material account will be credit. This is one accounting entry. After this delivery, you are going to perform billing. When you perform billing here, during billing, there is another accounting entry. This is nothing but a sales. When you're talking about billing, we are representing sales. When it comes to sales, this standard accounting entry, customer account debit, sales account credit. Here I'll put customer debit, sales credit. This is the accounting entry during your billing. Now we need to map the values here. For every accounting entry, we need to understand how much debit amount will be and how much credit amount will be, from where the amounts are getting picked up. First, let's try to understand from the delivery point of view. When you are performing any delivery, you are going to debit cost of goods sold account, you are going to credit material account. When you are looking at the sales order or when you are looking at the sale transaction, we have listed we are selling 10 quantity of a particular material to a customer at 1000 per material or 1000 each. So in short, your total sale value will be 10 multiplied by 1000, which is equivalent to 10,000. 10,000 will be your sales amount. Your sales order is always going to give you the value of sales, not the cost of goods sold. Sales order will always give you the value of a sale, not not the cost of goods sold. What I will do, I will write the 10 multiplied by 1000. That entry will be updated during the billing, not during the PGI. So here it will be sales order quantity multiplied by sales order price. Here also it is the same. Now according to sales order, it is 1000 multiplied by 10 quantity. I'll say 10 quantity multiplied by 1000, 10,000 on the debit side. Similarly, 10,000 on the credit side. This one first we need to understand at high level so that it is easy for us to understand conceptually when we practically do these things on the system. Now your billing accounting document is getting generated like this, and this has become 0. Debit and credit is matching for the equal amount. Similarly, when you talk about delivery entry or cost of goods sold entry, the reason why we need to understand this logic is to make sure you understand how profits are calculated from your sales. Tomorrow, if somebody is asking you if you perform any particular sale, how do you know profit on this particular sale? Because from FI point of view, there is no standard report which will tell you or which will show you this is the profit that you are deriving or that you are generating from this particular sales. You have to depend on something called COPA, profitability analysis, to understand profit on a particular sale transaction. But from the FI point of view, there is no such report which will give you profit on a particular sale. You will come to know the overall sales during the month. During the month, what is your total sales, and during the month, what is your total cost, and you will come to know your operating profit. You will come to know your operating profit, in short, the net profit. But if I wanted to know based on a particular product what is my profit, or if I'm making profit or loss, I have to depend on COPA report, or I need to derive this figure manually calculating, or I need to design a report which will compute the figures and find out the profit. Before you do all these things, first thing we need to understand, if you look at a particular sale transaction, are we able to figure out what profit you are making from this particular sale or not? Just by looking at the sale transaction without depending on any reporting, whether it is COPA related report or it is finance related report, you must be in a position to drill down from the sales order or from a PGI document, delivery document, or billing document. Make sure if you know any one particular document, you are able to figure out what is the sales order, how much quantity is ordered, at what rate the order was placed, and what quantity we have delivered, what is the bill that we have generated, and total what is the sales price and what is the cost price, what is the profit. Make sure we have to understand these calculations manually first. Before you see how this is happening in SAP, first thing we need to understand how this calculation is happening manually, so that it is very easy for us to understand integration, how it is happening in SAP, what settings we are doing for this integration to happen. Right? Now, during the billing, it is straightforward: sales order quantity multiplied by sales order price. Now, when it comes to delivery or PGI, which is nothing but post goods issue, here the amount will be sales order quantity multiplied by material master price. This is sales order quantity multiplied by material master price, not sales order price. Here also it will be the same. Sales order quantity multiplied by material master price. For example, in your material master, price per unit is mentioned as 800. That is what we have listed. Material cost is 800. If I assume that this is 800, I have delivered 10 quantity. I'll take sales order quantity 10 multiplied by material master price. This can be your standard price, or this can be moving average price. Price which is valid at the time of delivery will be picked up from the material master. Okay, if I am delivering the product today at the time of delivery, whatever is the available price or whatever is the current price from the material master, that price will be considered. 10 multiplied by 800. This will be your cost of goods sold. Similarly, the same amount will be on the credit side. If I take these two and if I do a sum, this is also becoming 0. This is also becoming 0. This is the accounting entry for your delivery or PGI. This is the accounting entry for delivery or PGI. Now, any question on this accounting entry from where the amount is getting picked up? Any doubt question on this?
Sir, could you please explain that why we are debiting cost of goods sold and crediting material?
Okay. So whenever you here what we are doing a sale. When you are selling the product or you are selling the material. When you are selling the material, whatever the material that you are selling to the customer is currently listed as a stock. Whatever the material you are selling to a customer, currently this is listed as a stock. In short, inventory. Inventory will sit in your balance sheet account as asset. When you're selling the inventory, you have to reduce your inventory. Currently, your inventory is having some value in the balance sheet. Whatever the quantity that you are selling, you need to reduce that sales extent of material value from the balance sheet. So credit what goes out, your material is going out, you are going to credit the material. You are reducing the stock value from the balance sheet since it is an asset. So you are crediting the material account. This material account you are crediting because you are expensing it out. In order to find out your profit, you need to take this material as cost. In order to in order to balance this, you need to consider this material as an expense so that it is possible for you to find out the profit. You are selling this material. Whenever you are selling the material, you are crediting your sales. Whenever you are selling, you are crediting your sales, but I am selling this to a customer in order to make a profit. How will I know whether I made profit or not? I need to take the cost of my sale. This is what my sale, but what is the cost for this particular sale for me? That is nothing but cost of goods sold. Whatever the goods that you have sold, which is nothing but the material that you have sold, will have a cost. The same cost you have to expense it out. You are expensing out your material, for which you are crediting, you are reducing the value from the material account, in short from balance sheet asset, and you are charging this from balance sheet account to P&L to find out the profit or loss position. Clear?
Understood, sir.
Now once you put debit to the cost of goods sold account, the amount for this is coming from sales order quantity multiplied by material master price. Wherever you are talking about material master price, this is part of integration. So I'll not write exactly from where the accounting GL accounts are coming. That I'll explain in the upcoming sessions with different logics. For now, this we are talking about FISD integration. In the FISD integration, delivery or PGI, I'll write this is integration. This is, keep in mind, this is not SD integration. This is integration. This is SD integration. This is SD integration. So your delivery or PGI is always based on the integration, not based on SD integration. If somebody is asking you tomorrow from where the PGI accounting entry is getting posted, your PGI accounting entry is posted based on integration, not based on SD integration. I'll explain you from where the GL accounts are coming, why we are telling this is integration, not SD integration. So these are all the small points, but this will create huge impact on your interviews. When you're explaining, these points will have huge impact. Your PGI is coming from integration. In your PGI, you are debiting the cost of goods sold, wherein you are taking sales order quantity multiplied by material price. Material also same thing, sales order quantity multiplied by material price. In this, again, there will be different scenarios like partial delivery. Out of 10, if you are delivering only 4 quantity, here you will be taking delivery quantity multiplied by material price. The logic remains the same. Whatever the quantity that you are delivering, you are taking that quantity multiplied by material price. Similarly, if you are doing a partial billing, whatever the quantity that you are billing, that bill the quantity multiplied by sales order price. So here I am not taking partial scenario, here I am taking the full scenario. Whatever is ordered is delivered, whatever is ordered is billed. because logic remains the same. If it is partially delivered, you are going to change the quantity only. Instead of 10, you may be multiplying with 4 quantity, 3 quantity, whatever is delivered, whatever is built, but the way you are deriving the amount will remain fixed. Now this is your two accounting entries that we are generating based on the PGI, based on the billing. Now your requirement is to find out the profit. Your requirement is to find out the profit. Now profit has got a formula. Profit has got a formula. This profit is always profit is equal to sales minus COGS. Instead of calling it as cost of goods sold, we normally call it as COGS. Nobody will tell complete expansion cost of goods sold. Majoritarily, everybody will talk about COGS only. You also start remembering this COGS. Even if somebody is asking, instead of telling the cost of goods sold, you can tell COGS. Now here, to find out the profit, you must know the value of your sale. Value of your sale is 10,000. You will be taking 10,000, and value of the material that was sold. Value of the material that was sold is 8,000. Material cost is 8,000. You need to deduct 8,000. If you do this logic, is equal to 10,000 minus 8,000. Here you are getting 2,000. But if you look at this from accounting point of view, you are getting a positive 2,000. But you have to always see even the number also from the accounting point of view. According to that, sales is on the credit side. Anything which is on the credit side will be a negative number. Anything which is on the credit side is a negative number, right? Anything which is on the credit side is a negative number. I'll put negative number. And this cost of goods sold is on the debit side. Debit side is a positive number. So what I will do, this I do plus here. Now if I take the difference between the debit and credit, if I take the difference between debit and credit, what I am getting 2000 negative figure. Negative figure is always represented as profit. If I put the same thing in the P&L form, if I take it a P&L format, and on the debit side let me take expense, on the credit side let me take income. Expense side I will take COGS, which is 8,000. Income side let me take sales, which is 10,000. Income side I am getting 10,000, and expense side I am getting 8,000, which is my cost of goods sold. If I consider the total value, my total revenue or my total sale is 10,000, because as per the accounting law or as per the accounting logic, you need to close the account with the higher number. Credit is higher number, which is 10,000. Debit is lower number, which is 8,000. I need to close the account with 10,000. I need to close the account with 10,000. If I verify this, my debit balance is short by 2,000 because my credit balance is more. If your credit balance is more than your debit balance, your balancing figure will result a credit number, which is always called as a credit balance. Now here, to balance it, I will have to put 2,000 on the debit side. If I put 2,000 on the debit side, this is going to be a profit. This 2,000 is going to be a profit. I'll put profit as 2,000. Is this clear? Now the sales that you are getting from this, the profit that you are making from this sale is 2,000. Is this clear how we are getting this 2,000 profit and how we are identifying or arriving this based on the accounting entry? Any question on this? These two accounting entries plus profit calculation of 2,000. Any question?
So can you explain this delivery and PGI activity, like what actually happens?
In delivery, you are going to record that the material is delivered from the SD site. In PGI, you are going to pass the goods movement. Because when you're delivering to the customer, point number one, you're handing over product to the customer, correct?
Yes, sir.
So you're handing over product to the customer is called as a delivery. You're delivering product to the customer. But before you deliver the customer, you need to pick up the product from your inventory, from your
Yes,
stock.
sir.
So whatever the item that you're picking up from your stock is called as PGI. You're making a goods movement. So whether you're adding the stock or you're removing the stock from your inventory, from your material. When you're selling 10 quantity from your material, are we adding it or are we deducting it?
So we are
Deducting
deducting
it,
it.
sir.
We are deducting it. When you're deducting the material, you need to credit it because your stock is an asset. Any addition to the stock will be a debit. Any deduction to the stock will be a credit. In short, the same logic which is used for your asset. If you are purchasing your stock, material account will be debited. If you look at this from the PO point of view, from the point of view, whenever you receive the goods based on the purchase order, you are debiting the material account, correct?
Yes,
Yes,
sir.
sir.
When you receive the material, your material account debit. When you are giving the material, when you are giving the material or when you are selling the material, you need to take out the material from your stock. When you are taking out the material from the stock, you will be crediting the material account or inventory account.
Yes, sir.
Delivery is not going to create any accounting impact. Delivery will have to be confirmed as PGI, post goods issue. Because I have taken 3 material from my stock, I need to confirm that I have taken 3 material. This confirmation is nothing but PGI. When you do a PGI, your material stock will get reduced, and with the same material stock value will be deducted from your balance sheet. Stock quantity will be reduced, stock value will be reduced. Stock quantity will be updated in the material master side. Stock value will be updated in the financial accounting side. Because anywhere, wherever you get the monetary impact, whether the amount is getting increased or it is getting decreased, it will have to pass an accounting entry. Since you are taking out the material, whatever the value that you are taking out, it has to be reduced from your balance sheet. Clear?
Sir, this 8,000 not reflect to customer, na?
No, 8,000 is not related to customer. 8,000 is related to your logistics, material, the stock that you are taking out. I am removing this 10 quantity from my material. I am removing this 10 quantity value from my stock value in my balance sheet. That is why in this accounting entry, it is not written anywhere customer. And this is also not written as SD integration. This is written as integration. Based on the integration, this accounting entry will come, not based on the SD integration.
Okay, sir.
Sir, in
Thank you,
Okay.
this
sir.
case, the finished goods as also it is mentioned as material only.
Material only. Material means it can be any material, raw material, finished material, packing material, semi-finished material. Okay, based on the nature of product that you are selling, the respective material account will get credited. In short, inventory account. Normally, whenever you sell, you will be selling finished product only. Clear?
Yes, sir.
Yeah. Any questions from this? These are these small initial basic fundamentals that we need to understand before we get to know the integration logically. Because you should not learn, you should not by heart the integration in a different way. Instead, we have to try and understand this from a practical point of view so that you will not find anywhere difficulty. Configuring this is a simple task. You will be making FIMM integration in one transaction code. FISD integration in another transaction code. But why you are making this configuration, what is the business impact, how your accounting entries are coming, at least for a few scenarios, if you are able to understand, you can easily manage in your project. Tomorrow, if somebody comes up with a query, I want to understand why my profit is coming as 2000. Why my accounting entry is posted like this, why 10,000 is getting posted, why my COGS is coming as 8,000, from where system is picking up this number. Make sure you are able to understand how the system is bringing these numbers, what logics system is applying to calculate the figures. Because looking at the accounting entry, it is very easy, anybody can easily tell this. COGS account debit, material account credit. The moment you have been asked to explain with an example, that is where make sure you are confident enough to take an example and then explain. Or your user is coming to you asking that this is the sales order, but in this sales order, the COGS value is coming wrong. We are selling a product for 10,000, but COGS is coming as 11,000. Can you please tell me why system is picking a cost of goods sold as 11,000 when my sale value is 10,000? You must understand how the COGS is getting calculated in system. Accordingly, make sure you are able to backtrace, find out all the figures from the system based on the material and all, and explain to your client, convince them this is why the system is creating like this. Because nobody wants to make a loss when you do a sale. If your sale is 10,000, cost of goods sold is 11,000, you are ending up generating a loss of 1,000. For which they will ask an explanation why system is picking cost of goods sold more than sale value. So for these kind of things, we cannot tell that I do not know, you check with your consultant, or you maintained price wrong and all. You are not supposed to tell. You need to analyze, investigate, make sure that the system is taking the values properly, and then explain them on what basis these numbers are coming. Because if you tell that this is fine, the other person will not be convinced with it, because they are incurring a loss from it. They want to fix it, they want to rectify it. Even this goes to the SD consultant. SD consultant will refer it to FI consultant. They will tell this is related to finance, the values are getting posted incorrectly, please check with FI consultant, or please check with FICO consultant. As a FICO consultant, you need to investigate, understand how the numbers are coming, from where system is picking up the number, where things are going wrong, why your COGS is coming negative, or whatever. In any situation, make sure you are able to understand the process, you are able to figure out the calculation logics, and then you are able to explain and then convince your client or the user. It is not about maintaining the configuration, it is not about remembering the table in which the integration settings are stored. That anybody will tell. But understanding this from a practical point of view, at least with a few basic scenarios, is more than sufficient. Because in your interview, this is what they want you to explain, not the config, not the T code, not the table. Because if you ask this question to 100 people, more than 90 people will tell the configuration, T code, table. But when everybody is telling the same thing, if you are also telling the same thing, then you are among a batch. Then you have to depend on the lottery system whether your name will be picked up as selected or not. Instead, you explain them in such a way that the other person will get impressed, that they feel that yes, you know something better. So for that to happen, no other option, you need to explain in a different way, you need to understand and convince in a different way. Clear? They don't expect beyond this. This is what they want from you. Try to convince the other person that you understand how it works logically. That's it. Any questions on this? And make sure whenever you're talking about FI/SD integration, we should also remember something related to COPA. If somebody is asking you about COPA, if you say that you worked on FI/SD integration, you cannot say that I do not know COPA. You can say that you have not implemented COPA, you have not worked on COPA, but not that you do not know COPA. Because when somebody is using SD module, they will definitely use COPA. If SD module is configured, COPA module will be configured by default. Majoritarily, wherever there is SD module, there will be COPA module. If you are working as a FICO consultant, you must be aware of COPA process. How data is flowing from your FICO, SD, MM to COPA. COPA doesn't have any data of its own. It receives the data from different modules. How data is flowing from FI to COPA, how data is flowing from SD to COPA, how data is flowing from MM to COPA is what we need to understand at a basic level. That is more than enough. Nobody wants beyond this from you as a FICO consultant for your level of experience. Nothing beyond this is required. But make sure you explain what reports you generate in COPA, how do you find out the profits, what kind of reports you are extracting from COPA, how do you put logics, formulas in COPA to arrive at the profit. These points, if you are able to explain this is how it works, sufficient. Nothing more than this is needed when it comes to your FI SD integration. So we will be listing out the configurations on what basis, what points you are going to consider when you set up FIST integration. Similarly, when things are going wrong, if your accounting entries are not getting generated in SD, how you are going to analyze the account determination. Sometimes your accounting entry will not get generated. Billing document will get generated, accounting document will not get generated. In such cases, how do you understand or how do you analyze the reason for accounting entry not being generated? Sometimes taxes will get incorrectly posted, or your billing is not supposed to have tax, but it has been billed with a tax. Now you want to rebill it again without the taxes. So there are different cases in which your accounting document may not get generated from billing document. What are those reasons? How do you analyze because of what reason the accounting is not generated? How do you resolve those things? These are the points that you will be questioned in your interviews. So these points, at least 3-4 reasons why your billing document will not flow to accounting. What are the possible solutions for this? If we are able to remember like this 3-4 solutions along with the impact, more than sufficient. In fact, nobody will listen to you this much explanation. They will tell half at the half only. They'll say, I understood you are good at integration. Let me go to the next question. This is how it will be. Provided you explain in a proper way with proper examples. If you're only talking about configuration steps, T-code table, you will start receiving different questions. They start giving you the scenarios and they want you to explain. If this is the scenario, let's say, how do I find out my profit? What are the possible reasons wherein your billing document is not transferred or not interfaced to accounting? How do you analyze that this particular GL account will be picked up for my sales? On what basis the system is picking up the sales account? Or where exactly do you configure this? Is this part of MM integration activity or SD integration activity? These kind of points, small points only, because it's not a big module. FIST, FIMM is a simple thing. Majority of the thing is carried out by the SD and MM consultant. You just need to understand the process, cycle, and where your involvement is required as a functional FICO consultant. This is what you need to understand, but you do not have to know the complete top to bottom, not required. But yes, you must know the flow, you must understand the cycle. Clear? Any questions on this?
Sir, I have a question from the last session of FI to MM integration. So there we saw the difference between the metal master price and the purchase order price. That is the which is resulting to the price difference
Price difference, yes.
difference. So my question is, because we are creating the material master and we are only creating the PO. So why is it creating that difference?
Let's say you are purchasing, you have a material master.
Okay.
Okay, if I talk about any particular product, for example, if I talk about let's say I talk about a pen. You are purchasing a pen. Now, when you are purchasing a pen, according to you, not everything is a pen. When you talk about a pen, you have a specific specification for the pen. Let's say I talk about cello pen, 0.5 mm, blue color ink, correct?
Yes, sir.
You have a specific dimension, specific identification for a product. When you talk from the logistics point of view, not everything is considered as a pen. So you are going to have a specific dimension, cello, blue ink, 0.5 mm. Now, when I say that, assuming that in the market you get that pen for 10 rupees, MRP for that pen is 10 rupees. If you want to purchase, it will cost you 10 rupees. Now, according to you, the average price or the standard price in the market for that pen is 10 rupees. If you want to buy, you will get it for 10 rupees. Agree?
Correct, sir.
Now, I cannot go to the market and then say that for 5 rupees, can you give this pen? For 8 rupees, can you give this pen? Not possible. You know the average price or standard price of that material. As a result, while creating the material master, you are updating the prices 10. Due to certain circumstances, maybe different market fluctuations and all, the price of the pen may be increased, or this 10 rupees you may be getting from a particular seller. Not everybody will give you at the same price, correct? Every seller will give you a different price, something high and something low, minor variations.
Right, sir.
So according to you, the pen you are purchasing based on your past history 10 rupees. Now due to some reasons, the seller that supplies to you the pens, he says I am currently running out of stock. It takes some time for me to bring this stock, so I cannot take your order. You need these pens. What you will do, you will purchase from some other supplier.
Yes, sir.
Now another supplier might give you for 10 rupee 50 pice. Possible or not?
Possible, sir.
He says that no, we will give in our shop we sell it for 10 rupee 50 pice. Or he might tell, okay, we will give for 9 rupee 50 pice or 9.80 pice. So there is no rule that the every supplier will have to sell the product at the same price. The moment you change the supplier, the different factors in the market will result hike or the lower of the prices. Now to
Correct, sir.
analyze this, the actual price according to our business history is that 10 rupees. On an average 10 rupees you will get this. This is what we budgeted for this material. But when you actually purchased it, you ended up paying more for this, but no other option, you need to pay for it. You cannot bargain with the supplier if he says no, we will sell it only for 10.5. No other option, you need to charge 10.5 and you need to procure the material. Now you need to analyze it, right? Tomorrow for your analysis purpose, what are the price differences that we are getting in your system? Let's say you updated the material price as 10, assuming that the product has increased the price. Currently everywhere you get for 10 rupee 50 pice. Now you need to change your material price also.
Yes, sir.
You need to change your material price also. If this is not the situation, but for some reasons you are getting the material for a different rate, now you don't need to change the material price, but to analyze whether you are getting the materials from the market as per your agreed prices or as per your expected standard prices, or there are any variations. There are certain products which will more or less will cost the same. There are certain products which whose price will keep on fluctuating.
Yes,
Correct?
sir.
Huh? Certain material prices will keep on fluctuating. It doesn't have a fixed price. For certain kind of materials, you will be using moving average price. For materials where the price is more or less fixed, you will be using standard price. But either of the cases, you will have to track what is the material price according to you. When you created a material, you assumed you get it for 10 rupees. But due to different reasons in the market, when you purchase from various suppliers, you are receiving it at different prices. For you to analyze this, for the better forecasting, for better identification of a supplier and all, you must identify the price differences. Okay, whenever you are creating any material, material must be valuated. So when we say material must be valuated, your material is supposed to have a value in the balance sheet.
Yes, sir.
Now your material is supposed to have a value in the balance sheet. Your material must be measured. What is the quantity in terms of liters, in terms of each, in terms of pieces, in terms of kgs, in terms of grams? Agree?
Correct, sir.
Now, if
Yes.
you're talking about liter, every liter will have a price. I cannot say that this is a bulk price. That way, it will not work out. If you're talking about my material is measured in each costing how much you must represent. If your material is represented in kgs, what is the price per kg? And your material valuation is always based on quantity multiplied by rate. So now this quantity is something that is fixed. Rate can be based on the standard rate or moving average rate.
Sir, on
When we do
what
the
basis we...
configuration,
Okay. Sorry, sir. Please go on, sir.
yeah, when we do the configuration of integration, I'll explain different scenarios in this.
Okay, sir.
Normally,
Then,
you will
sir,
be evaluating raw material on moving average price basis, and you will be evaluating semi-finished finished material on standard price basis. Clear?
got... Yes, sir.
Raw
Got my
material
answers.
is valuated based on moving average price. You can also evaluate raw material at standard price. Both are possible, but majoritarily raw material is valuated at moving average price, and semi-finished product, finished product, and then your packing materials and all, we will be proceeding with standard price. It again depends on the business decision. Whatever the way that they want to value it, it is up to them. Either moving average price or standard price, based on the business practice they will adopt. Clear?
Understood, sir. Sir, while answering these journal entries in the interviews, so shall we mention the tax line items also, or these two line items
Yes,
is enough?
yes. If taxes and additional cost will be there, those I'll explain in the next ones. This is the basic things to begin with. To start understanding the basic process, we are understanding the basic points at the beginning. Slowly, I will add different conditions. Let's say if you are giving discount to the customer, sometimes what will happen, you will sell a product to the customer. Let's say I am selling a mobile phone to the customer. Normally what will happen, along with the mobile phone, I may be giving the back cover for free of cost. Correct?
Yes, sir.
Along with the mobile phone, I may be giving back cover for free of cost. Along with the mobile phone, I may be giving tempered glass for free of cost. Along with the mobile phone, I may be giving, let's say, earphone is also free of cost. Now, one mobile customer is purchasing, but along with one mobile, I am giving 3 free gifts. Correct? Now, how you will
Yes,
account these 3 things? Tempered glass is also a material for you that also has a stock,
correct, sir.
Yes, sir.
and your back case is also a product that also has a stock. You have to reduce that also. That also contains the value in your balance sheet. Now you are not charging it to the customer. Where will you take it? Now, do you need to pay tax for it? If you are giving for free of cost to the customer, it is your choice. But government will tell no, you need to pay tax for this also. Whatever you are selling to the customer, please pay tax to us. Whether it is GST or any other tax, government will tell we need to receive the tax on every product that you are selling to the customer. If you are giving discount, that is your choice. I have no control on it, but I am supposed to receive tax on it. How you will handle these kind of things? Let's say you are giving delivery to the customer. Sometimes delivery charge will be paid by the customer, sometimes we will bear the delivery cost. Correct?
Yes, sir.
And you may be having various other expenses or various other things. How these other conditions are handled in your sales and distribution integration or SD integration, these points I'll explain you with simple examples when we are actually configuring SD integration. But for your interview point of view, whatever the points that you need to remember, how you need to explain, I'll list out in detail. Along with the scenario, accounting entry, what points you need to mention in your interview, I will list out everything. But before that, we need to have the basic understanding so that we will not get confused. Because when things are getting complicated, when different scenarios are coming, we have to be strong on the basics so that you will not get deviated. Otherwise, we will get lost and we will not understand anything. We end up thinking that integration is very tough. So that impression we should not get. If that mindset we are developing, we will not understand anything. Slowly we should first get used to it. We should feel comfortable that this is easy, I'm able to understand. Then slowly we will add different scenarios to it. Addition of additional scenario, if you understand this, will not take much time. Even if we talk theoretically casual, you will be able to understand what is what. But for that, we have to understand the integration part first. That is what we are learning now. Okay.
Yes. So, sir, I have one question. Uh,
All right. Read through this. Okay. Try to understand this accounting entry. Try to put some more examples of your choice. Try to take different customer name, different amount, different cost price. See if you are able to understand. You're unable to get. You're not getting into a confusion state. And then when we talk about different other scenarios, it is easy for you to understand. First, make sure these points you are able to understand whatever we discussed so far from the point of view and SD point of view. Then in the next sessions, we will talk about how these accounting entries are coming. From where system is taking cost of goods sold, on what basis you are giving the GL account, from where material is coming, on what basis you are giving this, from where customer account is coming, from where sales account is coming. If there are any other GL accounts, where do you map them? These points we will be understanding in the upcoming sessions.
the
Okay?
tax part also include in this?
Yes.
Uh, okay.
Sir, one doubt, sir. Sir, that price difference, gain or loss will be created, separate GL will be assigned, or else valuation class also will be involved, sir, in this.
Price difference will come in the You will define a separate GL account in PRD. If you go to
Sir, got
OBYC,
it.
you will find PRD. There you will assign.
Got it,
Sir,
sir.
in my client, there is no price difference amount itself, sir. So when the differences come again, they're crediting or debiting to inventory only. That
That
how it
is,
will
if you
be.
use moving average price, system will not take price differences. It will adjust with the material itself.
Only if that price difference account is possible with the standard price, not moving
Point
average.
number one, it is possible with standard price. Point number two, it is possible with moving average price provided there is no stock in the material. If it has got
Oh.
available stock in the material, it will adjust with the available stock. If not, it will post to the price difference.
When the material is become zero, then it will hit to the price
Price
difference.
difference. Yeah. Because it doesn't find any available quantity to adjust the price difference.
Got it. Sir, one ticket I got confused, sir. Here, instead, my client is posted instead of 18% GST, they have posted for 12%, and the payment received and everything is happened, sir. Now, how to do? I mean, do we have any, like, what suggestion I need to give them to get that 6%?
For customer or for vendor?
Customer.
Then you need to create another billing document only with the tax portion.
Okay.
You need to create another bill, or you need to cancel the billing document. Cancel the billing document. Go
Okay.
to the sales order. Change the tax settings. From the sales order, you need to change the tax rate. Whatever the tax code that they have given, instead of 18% 12, whatever, change that to the right. And from the sales order, you will find an option called conditions or analysis. So there you have to click on redetermine taxes. You will find different single digits. There you need to select a G. update the conditions, redetermine taxes, one option will be there. If you tick that, system will recalculate the taxes and it will update the billing value. After this, if you go to the billing document, it will create a fresh billing document with the right tax percentage.
So already
Um,
received that we need to post one debit note for that.
If this is a GST, you are supposed to provide the bill to the customer, right?
Correct, sir.
So for that, you need to create another billing document only to
Okay.
the extent of GST portion or tax portion, or you can pass one manual this one. What do you say? Manual accounting entry in the customer account. Debit the
Okay, sir.
customer account, credit the straight away the tax related GL account.
Uh-huh. They can repost the correct with the correct GL, I mean tax code.
No reposting. Whatever the existing billing that happened, that will not be touched now because bill has already been generated, given to the customer, and customer had already paid. Now you realized that it was posted with wrong tax. Tax was calculated short, less. Correct? Huh?
Yes, sir.
So point number one, you need to cancel the billing document, which is not possible because customer has already paid. He will tell no, I have already recorded this invoice as my incoming invoice in my system. If you are changing it, your customer will also have to reverse his purchase entry there.
Correct, sir.
So this normally is not allowed. So normally what you will do, you will create another entry either through sales order to the extent of tax portion only, or you will pass a direct debit entry in the customer account. Debit the customer account, credit the tax GL account.
Got it, sir. Got it.
Okay, and then for this manual invoice, you will have a program to print out the debit direct customer invoices, DR entries. Because
I'll
sometimes
do
your
it.
customer will ask you to provide the invoice copy. Check if there is any program created wherein you can generate the bill for the manual interest, TR interest.
Yeah, yes. We have, sir.
Yeah. So that one you
Z.
need to print and then, correct. That will be there for every client, common one. Okay.
Yes, sir. Thank you.
Yeah. All right then. Let me stop this recording.